So today is Wednesday, August 28th, and I'm going to be placing some high probability trades. Best Buy has earnings coming up, and as you can see from the Ichimoku, they have a bearish Ichimoku cloud. So I will be, I think this one stops freezing. I will be placing a strangle ahead of their earnings, which are tomorrow. They are currently trading at $68.74, and they have a bearish Ichimoku. So I'm going to place it on the mobile trader app because Thinkorswim is just awful and too unstable, and it crashed the last time I tried to do it. So I'm going to sell, and it has a slight bearish tilt, so I'm going to sell the calls at a 20 delta and the puts at a 10 delta to give this more room to go down. So let's go over here on the app, and at the 20 delta we have a strike price of around 75.5, and this is for expiring this week right after earnings, so it'll be a huge implied volatility crush. So at there's a 0.21 delta and a 0.19 delta. I'm going to sell the 0.21 delta, which is a strike price of $75. And then I'm going to sell the 10 delta strangle, which is a strike price of $60. And Best Buy is up today. So that gives me a credit of around $1.20. I'm going to bump up that limit just slightly to 1.26, which will result in a credit of $124.70 after my $1.30 commission. My break-even stock prices will be $58.74 and $76.24. So as long as it stays between 58 and 76, I won't lose money. Max profit is $126, and my max loss is infinite. I'm going to send that order, and that is currently working. Right now it's trading at a $1.24 limit, and I'm selling that as a $1.26 limit. And then I'm also going to do a similar order. So you can see here my orders. It should show up now right there. And I'm also going to copy that order and submit a secondary order at a higher limit ask, a higher limit bid, to try to get some higher credit. And now you see that one just pop in. So my first one is for a limit of 126, and the second one is for $1.30. That's a lot more optimistic. We'll see if that sells. Next, Oracle, ORCL. ORCL is bearish. You can see the Ichimoku forecasting continued bearishness, implied volatility very high. RSI pretty low. Oracle is slightly down today, but because it's got a bearish Ichimoku, I'm going to sell strangle and give it a little bit more room to go down. So I'll do the 20 delta call and the 10 delta put, and I'm going to have this one expire right before earnings, so I'm not stuck with a huge price move after that. So September 16th is when Oracle announces. So I'm going to have this one expire September 13th. And yeah, even though implied volatility will still be high at that point, it's already quite high. You can see implied volatility up here. And I do expect it to keep climbing. However, I don't want to take the risk of a giant move in Oracle, so I'm going to have it sell September 13th, which is before its earnings on the 16th. So going through the options table, I am going to sell slightly, give it more room to go down. So I'm going to sell the 10 delta for the put, which will be a strike of 48, and I'm going to sell the 20 delta for the call, which will be 54 strike, and that will be a credit. And see, Oracle just popped up, so that is for a credit of about $56, small one, obviously, and it's currently at a mark price of 54, so it's got to come up a little bit. Now let's look at BBY. The mark and the limits are now in line, so that should be filled momentarily. And let's look at a few more. So we have Micron, and they are announcing September 26th. That is showing bullish future in Ichimoku, short-term bearishness. RSI is moderate, stochastic, oversold, implied volatility pretty good, but it looks like that's got some bullish action, and it looks like the Tenkan Kiju could be converging soon. So I am going to act on this one, and I'm going to give this a little bit more room to go up. So I'm going to sell the 10 delta call and the 20 delta put on Micron. And they are announcing September 26th. So I'm going to have this one expire September 20th, which is right before. So I'm not stuck with an earnings trade. And again, I'm going to give this a little more room to go up. So I'm going to sell the 10 delta call and the 20 delta put. And I'm going to ask for a credit of about $81. And it should be submitted momentarily. There it is. There's my Micron. And I'm going to do one more at a slightly higher limit. And there it is. And then lastly, if I want to look at just all the highest implied volatility, that would be SLV right now. SLV is extremely high. And that's very bullish, very bullish. So I am going to sell an out of the money put on SLV because I would like to have that put on me because of the implied volatility and how doubly bullish that one is. So let's take a look at SLV, and it's obviously a pretty inexpensive stock, so to get any real premium you'd have to go out, although the highest premium right now looks like it is with August 30th, followed by the September 2nd strike, but pretty weak in terms of what you can get for a bid ask. So let's look at September 20th, and at a 27 delta or 13 delta, so there's not much to be made there. Going out to October, yeah, there's a 20 delta for each. So for October, I could get $19 for the 16 strike, and that's at the 20 delta. And then the 20 delta on the call is 27 $7. Now that's at the 0.23 delta. Otherwise, you go to the 0.18 delta, which is $21. So let's put that one in. Bump up the ask price quite a bit. Probably not going to fill, but it's a GTC order. Make sure that it came out as GTC. Oh, see, that accidentally went in as a day order. So what we're going to do is replace that with a GTC. And there we go. All right. So none of these have filled yet, but that's fine. We'll come back to them another time. That's all. Again, today is Wednesday, August 28th, 2019.